with China, Becky, I think, listen, I think in the short term, this is obviously it's quite deflationary. It's quite deflationary to the extent to which it's going to slow down the global economy. Over the longer term, I do think deglobalization, which is a major theme and that's come out of the pandemic, is going to be inflationary. It's going to cause, it's been the major, I would say, tailwind for disinflation since the Berlin Wall came down and since China joined the WTO in 2001. And now you clearly have a movement towards onshoring or friendshoring, as Janet Yellen would say. And that's going to cause prices to be a little bit higher longer. But in the short term, this is clearly a bad development for global growth, and certainly a bad development for some of the industries that I like the most, which are energy and basic materials. We'll have to wait and see how China deals with this, but there's no way to sugarcoat it. This isn't it's not a great development.
Are you selling any energy stocks as a result, Jace?
Becky, I wouldn't, just because I think there are structural issues. I think, unfortunately, we're creating an artificial scarcity of oil and natural gas in the West. And I would have to wait and see how China is going to deal with this. My own opinion, and I know very little with regard to the situation in China, but is that eventually they'll have to come up with some sort of compromise that allows their economy to reopen, because this is clearly, it's unsustainable for them from a political point of view, and I'm not quite sure that they can afford it or the rest of the world can afford it.
So I guess the question becomes, has inflation peaked? And you bring up a really good point that I hadn't considered before. Next year, we should brace for quite a bit more federal spending because 60% of the federal budget, you point out, is indexed to inflation.
Yeah, this is one of the things. I think there was a real fear. I don't know how much of a fear there was for a blue wave, but I think if there was a blue wave in the midterm elections, people were very fearful that there would be a total lack of fiscal discipline and that President Biden might pass a very large fiscal stimulus package. And what we point out is that between Social Security, Medicare, and Medicaid, 60% of the budget, they're indexed to inflation. So the cost of living adjustment for Social Security was 8.7%. Mm-hmm. So you don't need big fiscal stimulus packages for fiscal spending, government spending, to be at odds with what the Federal Reserve is trying to do. And then we're not even talking about interest on the debt, which is set to explode, and then defense spending, which a lot of people feel is almost a necessity to increase defense spending. So the Fed has, in my opinion, we don't quibble with the idea here that inflation is probably peaked. What we might quibble with is how quickly it might come down. Right. That there are structural issues, whether it's labor, whether it's energy, that might make it more difficult to get to the Fed's target of 2%.
So what do you think of the 10-year at, what was it, 3.66%? 3.67%?
Becky, in the short term, I'm a buyer because of the things that are happening globally. In the longer term, though, I do think the absence of quantitative easing and the introduction of quantitative tightening means that eventually people are going to require some premium over the rate of inflation to lend people money. And it's been 14 years since we've seen that, but usually that's the way it works. And if you think inflation's going to be, let's say, ultimately 367, I'm not sure that's an appropriate level of compensation for the risk you're taking, even over the risk-free rate. And so,
go ahead.
Yeah.
Sorry. Go ahead. I'm sorry.
No. Yeah. No. In my opinion, that's ultimately going to be the residue of this. I think the switch from quantitative easing to quantitative tightening, in my opinion, is probably the biggest change in monetary policy since Volcker moved to target reserves as opposed to interest rates. It's a very significant change. And in my opinion, it changes everything as far as the financial world is concerned. You really have to focus on companies that can generate their own cash and grow on their own. And it also means that the federal government is not going to have the training wheels, at least for a while, of the central bank monetizing the debt.